Good morning, everybody. Mike Vaki, PrincetonTrader.com here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, so we've got daily chart of the ES, and I left this up from yesterday. And if you didn't watch yesterday's webcast, go ahead and check it out. What I talked about was if we demonstrated an inability to get through this 34-36 area, which was the lows from the 21st and the 22nd, we run the risk. If you're a bear, you call it a risk. If you're a bull, you call it an opportunity of chopping above this area as the band continues to go higher. And then typically what happens is that price will go up to meet the band and the uptrend continues. Well, that scenario is absolutely on the table. We traded yesterday to 34.5. We did not crack the 34 area with any authority at all. We're now trading up at 1747 quarter. We've traded as high as 51.75 overnight. If we continue to chop in this area for a day or even more, then 34 really is established as a support zone. And I would expect that the bulls would then go ahead and take their shot at getting back up to the upper band, which at this point is sitting up around 1672. Maybe by then up around 1762 to 1765. So this is kind of the pattern that I'm watching right now. I took half of my short off yesterday in profit, and I'll continue to do that today. I think we'll continue to trade two-sided today. I think we'll have at least one good down move. Typically, when you're testing these areas and it comes off of the upper band, it tends to trade below the upper band for 2 or 3 days. If it jumps up today, that would be a real signal of strength by the bulls and a real indication of kind of chronic weakness by the bears. Not that the move here doesn't demonstrate chronic weakness by the bears. I'm talking about in the much more immediate term. So today's a big day, especially if you're a bear, because you have to break this cycle. So you have to ask yourself, I was mentioning this to my subscribers last night. Yes, we were trading down at 1640 on the 9th, and we traded as high as 1754. And yes, that's 114 handles, and that's nice. But if we can't get through 34, what do you want to be short for? That's the question you have to ask yourself. If the bears can't get down through 34, and 34 is established at support, isn't the better trade to be long against 34? I think it is. And if we continue to do this, then at least my thought with people would be to go ahead and put out some longs for this reach back up to the upper band. Now, if we get back down to 34, I'll probably take some more off my short. If we break through 34, that's great. Then I'll take some more off my short for more profit. But what I'm not going to do is try to fight a market that can't get through 34. That's the bottom line. So that's what I'm looking for today. Pivot-wise, we have double pivots, the 43-44 area, so look out for that. That will probably be the key line today that both sides want to either trade above or below if they want to control the day. So everybody have a good one. Follow us on Twitter at Princeton Trader. Come check out the website. Check out the chat room. I will be back tomorrow morning with another webcast. Trade them well, everybody.